Stocks are lower this morning as crude oil crashes to a 21-year low, plunging to its lowest level there in decades as demand shrinks and those OPEC plus cuts we've been talking about don't seem to be having the desired effect on the market. Here to talk more about oil with us is John Caruso. He is senior market strategist at RJO Futures. John, good to see you again. I mean, with crude oil near $10 a barrel, I mean, how low are we going to go? Some people are talking about negative oil.
I'll tell you what, I think your last guest that was on was 100% accurate. I do think this is a little bit of a bottoming process that's taking place right now in the May contract. If you look at the forward contracts, you've got a roughly 100% premium to roll from May into June this morning, with the May contract obviously expiring today. So to be honest with you, with the super contango that we're seeing the market in right now, I think it makes investing in oil, especially the oil futures over the long haul, very, very difficult to do. I do think this is a little bit of a bottoming process here, but as a trader, I think you still have to look at selling rallies in the forward contracts until we do see the economy start to show some signs of life and things come back to normal, which could be very, very difficult to do. And it's going to be even more difficult to try to forecast what demand is going to look like 3 months from now, 6 months from now, even a year from now.
John, for the average investor out there, can you help explain what precisely is happening? Is it just that there's just way too much inventory?
Yeah, absolutely. I mean, the market right now, I mean, what we've seen on the demand side of the market has been completely unprecedented. We're losing 25 to 30 million barrels a day that's come offline since the onset of the virus. There was also a rumor that Saudi Aramco, just ahead of the March production cuts, actually did send a large shipment of crude oil to the United States that is yet to hit the market. You might be seeing that being priced into the May contract right now as we speak. The 9.7 million barrel cut by OPEC, yes, it's a record cut, but there's nothing you can do to offset the 25 million barrels a day that are coming off of line due to the virus.
So, John, with oil this low, I mean, down 35% here, what does it mean for some of these oil producers? Is it just that we're going to have to see some of them not survive this because they can't hang around with oil this low?
You're absolutely right. We've already seen a couple companies they've filed bankruptcies over the last week. I think it's going to be very, very difficult for a lot of these United States oil drillers to actually survive this scenario. I know that the U.S. government was also talking an unprecedented situation where they would actually pay producers to leave their oil in the ground unproduced for the United States government to take delivery on going out some months. So, that's a scenario that could potentially play out. And I think it's probably a last case scenario for the United States government.
John, very important point there. Do you think the selling, not just so much in crude oil, but crude oil related stocks and the producers, that won't stop until the government does step in here and come up with some form of relief plan for the sector?
I think that's partially accurate. You will certainly see a relief rally if you do see the U.S. government take action. However, I think the name of the game here is the demand side of the market. You need to see demand come back. Again, we're seeing some unprecedented times right now with the demand destruction that we've seen. I know the president has been talking about rolling the economy back out in phases. I do think once the May contract goes off the board and we start moving into June and July, you are going to see a steady uptick in the market. However, we're certainly still not out of the woods. As your last guest mentioned, I do think that, the bottoms are a process and it could take 2, 3, 4 months for us to actually find some stable ground in that market.
And lastly, what about the effect on gas prices? I mean, I filled up this weekend. I'm not going much of anywhere, but I had to fill up my tank and I spent $1.85 a gallon. I mean, that is insane. I don't remember the last time I did that. So I guess a silver lining here is that gas prices are so low. The problem here is that there's no demand because none of us can move about freely.
Absolutely. There's just no demand for the market right now. So you could charge 50 cents a gallon. And if people aren't driving to work and they're not taking road trips and they're not taking trips to the store, it's just there's no demand out there. So it really doesn't matter what the price of gasoline is. If I'm I used to fill my tank up in the gas or my gas tank up, probably once every 2 days. Now here I am once every 2 weeks because, here we are sitting at home, and you've got the demand destruction of the market that it's just not coming back online.
It is incredible times. John Caruso, Senior Market Strategist at RJO Futures. Thanks for your thoughts on oil today.
Thank you.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.